The accumulation distribution indicator and price will often move in the same direction at the same time. This points to sufficient strength for a trend in terms of volume. For example, this uptrend with more than enough volume continually closes higher to make consecutively higher peaks and troughs, while at the same time the AD indicator forms higher highs and higher lows in an uptrend of its own. Depending on volume and price action that form certain types of candles, the line formed by closing prices and the line formed by the AD indicator can have slight variations, especially in the short term. In the broader context, with an uptrend like this, the overall direction is the same with the AD indicator and price. With the black line representing price, it can be useful to choose an option that marks the closing prices. In this case, each dot represents the closing price of a particular day. When there are reversals, smooth changes in the direction of price will often be mirrored by the direction of the AD indicator. Viewing a line chart with closing prices marked can sometimes be more intuitive during the slower portions of a trend where a candle chart might appear to display more flat movement. Divergence with this indicator is a term that simply refers to the indicator moving in the opposite direction of price. It can point to the weakness of a trend in terms of volume, as well as how price is closing in relation to the highs and lows of candles. This is said to be a precursor to a reversal when price and the AD indicator will eventually be in sync and move in the new direction, in this case, the shift towards a downtrend. Essentially, another way to summarize some classic characteristics of reversals, where there is a decrease in bullish volume followed by an increase in bearish volume, and bearish candles with longer upper wicks, eventually transitioning to large red bearish candles. The last few days see the AD indicator move down sharply while price still manages to open at newer highs. That's because the closing prices are more important and they generally close lower. At first glance, it may seem like an upward reversal is taking form, but it would be important to remember there was already an existing uptrend with recent bearish signs. A few green candles with AD also moving higher is not sufficient, especially without closing above the previous highs. Again, there can be some variation and discrepancy between the AD indicator and price movement, especially in the short term when there are some unusually large candles with high volume, contrasted by periods of relatively flat movement with candles that are much smaller and with lower volume. In the bigger picture, it's more important that price and the AD indicator generally moved downwards with consecutively lower lows to identify and confirm the formation of a downtrend. Looking back at that minor bullish to neutral phase, we can see price did not close above previous highs while the AD indicator went on a much steeper uptrend past its recent previous highs. This kind of discrepancy can also point to the weakness of movement, in this case the weakness of a minor uptrend within broader bearish context.